market by 5% a year, year after year. That would be incredible. Don't race to buy a private jet, though. If you invest $100,000, then you would make an extra $5,000 a year by investing those 260 hours, or a bit less than $20 an hour. That's nice, but don't quit your day job. This is a course in how the stock market works, not how to trade options. You can look at options as a way to buy stock, though, so let's see what we can learn. First, what is an option? When your daughter Tiffany was wondering how she could handle the big yard in that house she was thinking about buying, you told her she had several options. She could mow it herself, pay a neighbor's kid, or hire a professional lawn care service, for example. Your daughter could pick one of these or not. Nobody could make her do it, but she could if she wanted. She had the option. Options on stock come in two basic types: call options and put options. Owning a call option gives you the ability to buy shares at a predetermined price if you want, but you don't have to do it. A put option is the reverse. It gives you the ability to sell shares at a predetermined price if you want, but again, you don't have to do it. Options come in so many varieties it'll make your head spin. We'll focus exclusively on simple call options. That's because all we need for this course is an overview of what an option is and the factors that affect its value. Most people think that's easier to do with calls than puts. You're more likely to encounter call options, too. You buy or sell an option through an options exchange, such as the CBOE, short for Chicago Board Options Exchange. Your broker will have access to one. Subject to SEC rules, the option exchange has complete discretion to set the terms of the contract. These terms affect the option's value. For example, the predetermined price you'll pay if you decide to exercise your option and buy the stock is obviously important. An option that lets you buy at $1 million per share isn't worth much because you'll always be able to buy the shares for less than that on the open market. The exercise price, also known as the strike price, is too high in this case. Who needs an option like that? The lifespan or maturity of the option makes a difference in its value too. The longer the life of the option, the more valuable it is. That makes sense too. If the stock is trading at 50 and the strike price is 60, then the option is out of the money, meaning that if you exercise it, you'll lose. If the option is only good until tomorrow, then the odds are that the stock won't reach $60 before the option expires. If you have 90 days before expiration, though, then there's a chance that the stock will rise above the strike price and be in the money. If it does, then you can exercise your option to buy the stock at the strike price and make a profit. Options traders know that other factors affect the value of an option besides these things. The most important are the interest rate and the volatility of the stock. We don't need to learn those details for this course, but don't think that options pricing is easy. In fact, it's frightfully difficult. When I work with options, I prefer to think in terms of payoff diagrams. Let's say that we buy an option on Hershey's, the candy company, which expires in 60 days. Let's say that the strike price is $100 and the option costs $10. Now imagine a graph and label the horizontal axis as the share price. Label the vertical axis as our profit or loss. If Hershey's doesn't rise above the strike price of $100, then the option is worthless and will have lost $10. So our payoff can be represented by a horizontal line at negative $10 from 0 through 100 on the horizontal axis. We'll wish we hadn't bought that stupid option in the first place. Beginning at a price of $100 for Hershey's stock, though, good things start to happen. At a price of $101, we make $1 by exercising. That doesn't cover the option's price, but it holds our loss to $9 instead of $10. Our profit line is still in negative territory, but it's tipped up $1. For every dollar above $100 that Hershey's stock costs, we make $1 on our